the DMs I was getting on Friday, it's like, what's up with the stock market? The stock market is up, but I've been playing conservative because of, I'm just really worried. I don't want to have any crash and interest rates and inflation and everything. It's like, okay, let me see if I can make sense of what's going on. So at the end of last week, there is a bunch of news that the stock market considers good. It may not be good for America or good for the economy long term, but the stock market considers it to be good. So what's this mean for you and me? Well, first of all, debt ceiling deal. And we had this, everybody knows how I feel. I think it was this bogus tension that we create. It's like an Avengers movie, this debt ceiling. Oh, we're going to default on the debt ceiling. Terrible things are going to happen. The dollar won't be the reserve currency. And I'm like, calm down, calm down, calm down. Look at your watch. This movie's been playing for 2 hours. We got roughly 20 minutes for Aquaman, Spider-Man, Iron Man, Captain America, Black Widow, or whomever to come and save the world in the last 20 minutes. And guess what? That's what happens. Except in this movie, the world doesn't get saved. The world gets shafted because the deal that's done by our elected officials kicks the can down the road. There's no reduction in spending. There was just a controlled effort to say, I get to spend this, you get to spend that, but I'm not giving you that, you won't give me this. And it goes back and forth, and then they reach a debt ceiling deal, which basically means to raise the limit on the company credit card, which is the country credit card, these United States of America, and they're going to keep spending. So they kick the can down the road. But the fact that the risk is removed from the dialogue, the stock market likes it. The stock market also wants to know what is going to be spent or not spent. And let's say there was an announcement that they were going to cut the research funding that maybe comes out of the federal government for drugs. That would cause biosector, whoop, pharmaceutical, whoop, that's what would happen. So instead, the market wants to know, okay, we have a debt deal, good, and what's being cut? Nothing. So the market's like, woohoo, all the government money that's going to end up at companies, because government's buying services and goods from companies, just like anybody else is. They're a huge customer, especially defense. Spending keeps going, so the market likes that. The second thing the market liked was there was an announcement that they said interest rates probably going to be flat in June. I've been predicting this. Those of you that are following me, you heard me. I've been saying this. No raise in June, no raise in August, and these are scheduled meetings of the Fed. I think the next one's coming up June 13th, 14th. You double check that, Kai.
Checking
and
it.
I think we also have economic data. So sometimes the Fed gets together and they don't say much. It's like your dad coming home tired from work. All right, I'm going to give you your allowance, but just leave me alone. I'm going to bed. That's one type of Fed meeting. The other type of Fed meeting is your dad says, hey, there it is, June 13th, 14th, and July 25th, 26th, and September 19th, 20th, and October 31st. So I believe nothing rate. Can they see this right now?
I don't believe so. That's
Oh, that's just me?
We'll bring it up. We'll bring it up.
Okay, that's okay. But anyway, in the next 3 meetings, I believe the Fed's going to be flat and at the next meeting, they're going to be announcing economic statistics. And this is where your dad comes home and he says, Tom, come in here and sit in the kitchen with me. How are you doing? I'm home from work here. I like to talk about your report card coming up in your finals. Have you been studying? What's been going on there? And you end up in this discussion with your dad, and he's looking at all the numbers. He's giving you his opinion. The Fed does that not at every meeting. That's happening June 13th, 14th. So we're going to hear all manner of government-generated BS. I mean economic statistics from the government are going to be rolled out, and we're going to talk all about that at the next Fed meeting. Well, everyone is saying, hey, Fed's not going to raise rates. It's going to be flat. That's what I've been saying is going to happen, and that's the forecast that I gave. So the market is getting more certainty of that as we are barely, not even a week. A week from now is the 12th, and that is when the Fed are all going to be gathering together. The meetings happen on the 13th, 14th. So a week away, the market is like, I like that. That's good news. The other good news is there's been signs that tech has been popping up on earnings. Want to know why? Some of this is temporary, some of it is permanent. But the temporary part is, what did tech do during first quarter and fourth quarter? Layoff, 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 layoff. So every time you lay people off, you trim expenses. Now there may be a big bubble that you have to say, well, I laid them off and I gave them all a severance payment. So here's this big, like an egg going through a snake. It's like this lump that goes through their financials. But they move that off and say, without the lump, this is my financials. The market goes, woohoo, you're more profitable. Because even if your sales are flat, if you reduce expenses by laying a bunch of people off, good things happen and market's happy. So there you go. So on Friday, you had all this stuff happening for the market. Suddenly, there is this pop-up and a bunch of headlines. You see these, Kai, on Friday and Saturday?
Yep.
Have we killed the bear? Have we jumped out of the bear market back into a bull market? You saw those?
Yeah.
Yeah, what did you think about that? You're reading that stuff, because I know you're really well read and you dive into this stuff.
Yeah, I mean, I think that a lot of it, especially in a news cycle, is they're just trying to have something as an excuse of jumping up or down and something new's going on. But I think overall, obviously, you have to look at it in a longer time horizon as opposed to just short-term 3 days and suddenly we're out of a bear market. And then also knowing what's coming on the horizon, because just because it's good today doesn't mean it's going to be good tomorrow. And unless anything within the system has changed from a fundamental standpoint, it's all just gravy on top anyways. So the party has to end at some point.